Since hitting an all-time high of $1,209 per share last year, a sharp decline has followed. Analysts have been predicting a bounce back, and the latest analyst to do so is longtime Tesla bear Ron Barron. Barron believes that Tesla is unstoppable and will bounce back at a certain level. Why does he think so? At what level will this stock bounce? Let's find out. Tesla stock is down 18% year to date, lagging the broader S&P 500, which is down about 9% in the same time frame. The poor performance comes after a stellar 2021, with Tesla shares minus 0.1, up about 50% as investors brace for higher monetary policy and higher interest rates this year. The recent sell-off may be fueled by a broader sell-off in high-growth and high-multiple stocks. Ron Barron is no stranger to Tesla and Tesla investors. Barron's predicted in 2016 that Tesla would become one of the most valuable companies in the world, with a 1% investment in the company. His company, Barron Capital Management, was one of the largest investors in the electric car maker at the time. Barron Capital is one of the company's largest long-term shareholders. According to Tesla Radi, the investment group owns approximately 6 million Tesla shares. Fortunately for Barron's, the cost of ownership of those shares is just $42.88. This investment has generated profits amounting to $4 billion, but Barron said it is just the beginning, with the possibility of tripling this amount in the next 10 years. Barron stated that his investment firm was more concerned with Tesla's business model than the stock's short-term volatility. He said, "When we invest in a company, we don't care about stock prices, we care about the business." He also said in the short term, "I can't predict what will happen. I think its market capitalization is now about $400 billion. When we first started, it was worth $40 billion in 2020. Barron's once again claimed that Tesla stock prices will rise again. Barron went on to say that he has long stated that Tesla's market cap would reach between $1 trillion and $2 trillion in light of recent events. He said, "I think $2 trillion is the correct number. 2021 proved him right, and Tesla made history by reaching the $1 trillion market cap mark. Now, over the next 10 years, Tesla could return 300% to investors," Barron says, anticipating that the electric car company will develop more facilities and sell $500 million to $800 million worth of cars. So far, his predictions have been correct. Will they check back? Barron's reveals why he invested in Elon Musk's electric car company in the first place. He explained that "I believe the opportunity with Tesla is to convert the cars we manufacture in the United States from gasoline to electricity, which has never happened before. You had to be a great engineer, a great leader, and have a good understanding of technology for this to happen. Then there were the vested interests to contend with, such as car dealers, car companies, and oil companies. I was betting on Musk, and most people were betting against him," Barron explains. He stated that the root of his belief in Tesla stems not only from the business, but from its approach to innovation. "They innovate at the speed of light," Barron explained. "They do the same thing with cars. They're also doing it with SpaceX." And he is absolutely right. What is Tesla's unique selling point? What is the driving force that made Tesla successful and made even the worst skeptics acknowledge the company's ingenuity? Innovation. This is what Barron believes makes Tesla unstoppable. Known for creating world-class innovations that redefine the automotive industry by releasing cutting-edge features and technological breakthroughs at a dizzying pace, Tesla has followed a program of continuous innovation since the beginning. This has stimulated competition, fueled innovation, and spread electric vehicles in the automotive sector. It's no secret that partnerships with major competitors like Toyota and Mercedes-Benz have also helped the electric vehicle segment grow. Tesla's advances in solar energy have accelerated the adoption of renewable energy sources, while also putting another nail in the coffin of fossil fuel companies. Tesla's acquisition of SolarCity last year demonstrated its understanding of the need to advance battery technology. They entered the energy space in 2016 with the acquisition of SolarCity, as part of a commitment to developing renewable battery technology. Tesla changed the way we think about energy storage. Since then, the company has been constantly promoting technical growth that does not have a harmful impact on the environment in all its projects and relationships, leading to a positive company image and thus raising its value. As the company continues to expand and come up with new innovations, there is no doubt that it will become more important as it grows beyond its current level. Tesla is currently working at an accelerated pace to reach its goals, and the company has prioritized expanding its factories as the production and delivery of electric cars is directly proportional to its profit margins. After a very long delay, Tesla has managed to make it happen. They finally got the green light to build their factory in Berlin, which is great news for investors. The Tesla Gigafactory in Berlin has received final environmental permission from Germany after a long process that included delays, protests, and other drama. The state of Brandenburg has produced an official document verifying the update and outlining the electric car company's next steps to start vehicle production at its electric car factory in Germany. As for the country's new statement, Giga Berlin's statement includes many activities, such as manufacturing up to 500,000 vehicles annually. The permission also includes battery cell production activities within the Giga Berlin complex, which should allow Tesla to manufacture its own internal cells from within Germany. What are the implications of this, and how will it affect Tesla's rebound to higher levels? The Gigafactory is crucial to Elon Musk's plans to unseat Volkswagen as the European market leader, with a 25% share of European electric vehicle sales versus Tesla's 13%. Germany's largest manufacturer has the upper hand in Europe, but perhaps not for long if Musk's plan goes as expected. The facility, which Tesla has begun construction under pre-approval licenses, will also contain a battery factory capable of generating more than 50 gigawatt-hours per year, far exceeding European competitors. Musk said that while the car batteries at the site will initially come from China, he hopes to reach production volume at the German battery factory by the end of next year. The company intends to produce 500,000 battery-powered cars annually, and according to media estimates, the company plans to invest up to 4 billion euros in the project. To put these numbers in context, consider the following. According to the company, the Volkswagen Wolfsburg plant, the company's headquarters, and the world's largest single-car production complex, with an area of 6.5 square kilometers, produced just over 700,000 cars in 2018. In 2022, all German automakers combined will produce 428,000 electric cars, vehicles in the country. It is fully battery electric and plug-in hybrid, with 62% of it being exported. All of this will undoubtedly lead to a more advanced shift towards electric vehicles, with Tesla being at the forefront. Meanwhile, Tesla stock prices continue to rise again, just as Barron's predicted. We believe this is due to bullish catalysts such as the Berlin Gigafactory, exciting new battery technology, rising oil prices, and generally renewed confidence in the company. If there's one thing Tesla investors expect from the company, it's that it gets better with each passing quarter. Tesla's momentum continues to build into 2022, a year in which the automaker will focus solely on expanding into new locations and introducing its new 4680 battery technology and structural battery pack. After performing well at the end of 2021, according to some reports, deliveries of Tesla Model 3 and Model Y cars in the mass market are increasing. However, will the stock continue to rise back to the price of its glory days or even outperform last year's prices by 300%? As Barron's claimed in the interview, Barron stated that we invest in companies that invest in themselves. There is no doubt that this is exactly Tesla's modus operandi. He pointed out that Tesla used its revenues to establish many facilities around the world, increase its vehicle lineup, and launch new projects. Many analysts expect that on this path, the only way forward is for Tesla. With more factories comes more production, with more products, more profits, which means more money for investors overall. Let's not forget the innovation factor. We think this is what makes Tesla unstoppable, and we completely agree with Barron. Due to its innovative and flexible nature, Tesla will always be one step ahead, as it will secure a larger portion of the market than its competitors, who have a long way to catch up, especially considering the statistics. In the United States, Tesla is the market leader in electric vehicle sales, while China and the United States are Tesla's most important markets. In 2021, Tesla delivered 936,000 cars around the world with the opening of its new factories. This number is set to rise significantly. So we think Barron's has a good point. There is certainly an amazing bounce in store for Tesla. Do you agree with Barron? Is Tesla unstoppable? Will Tesla investors see a 300% return in a few years? Comment below.